My guys, YouTubers, how's everyone doing? Hope you're good. Hope you had a good trading week last week. Alright, so let's get into this video now, right? As you can see in the title, it says $1,000 made in 35 seconds. Now, as you know, trading is not about successful trading, it's not about calculating or counting how much money you make. It's about identifying patterns and trading with consistency, right? Now, I just put that in the title so that you can understand how important or how potent these setups are. All right, so what I'm going to do right now, before I go into the explanation of the trade, I'm just going to play it so you can see it pan out. If you have a look at the chart pattern as well, see if you can notice anything here. See if you can guess the reasons and the logic behind the trade, and then I'll explain afterwards. I'm not going to say anything. I'm just going to allow it to play through for 35 seconds or however long it takes to manifest, and then I'll discuss it. Okay.
Order submitted. Order submitted. Order failed.
All right, my guys.
Order canceled.
All right, cool. So that was the trade. Now, let me rewind it and take it right back from the beginning and explain the logic, the reasoning behind it. Goes all the way back to here. Now, you're going to see a little bit of ladder analysis, and I'm going to explain to you the logic behind the things that take place on the ladder. All right, come on, son. This is all taking longer than expected. All right, cool. So from here, right, I want you to acknowledge this unusual size on the ladder. We've got 505 contracts resting at 13,768 and 25 cents. This is very, very unusual for the Nasdaq, right? Just look at the size of the ladder around it. We've got 6, 7, 8, 13, 6, even on this side. Down here, we've got the total amount, 584. That's the total amount of orders on the bid. On this side, on the offer, we've got 85 total numbers. So you can see this is taking up the lion's share. What does that mean? What does that tell us? That tells us that there are either 505 contracts, buyers, buying power that wants to be long. What does that tell us? That means if they're going long with that level of size, they want the market to rally far. They've got big intentions and big targets. Alternatively now, that can just be the orders from a seller who's been shorting the market all the way from up here on the 5-minute chart, and they just want to get out. Yeah, but either way, this is going to cause market volatility. Why? Because there are algorithms which are set, yeah, to front run. Front run means when they see large orders in the market, they buy ahead of it. And at the same time, there are discretionary traders and algorithms who, when they see size like that on the bid, they want to hit into it, yeah, so execute all 505 contracts, right, and then run it to the stop level, causing the market to tank even further. Okay, so I want you to observe what happens now, because this is very important, because there are going to be some trapped buyers or sellers. In this case, we end up having trapped sellers who need to get out of the market. And pay attention to where this happens. 13, 7, 6, 8, 25. This is going to be a key level, because if this market does go lower and the sellers can't keep the market below this level, then they're going to have to get out and they're going to place their stop somewhere. And when that stop gets hit, the market's going to go. All right. And then I think you start to get an understanding of why I wanted to add to that position that you saw earlier. All right. So let's just run it through now. Hopefully we've only got another maybe couple minutes left. All right. Let's go. Okay. You can see my cursor is hovering around the sell because I'm expecting the sellers to come and hit it. But at the same time, the buyers might hit it. So I'm just observing at this point in time. Nothing planned. Let me just pause it for a second as well. Just to talk very briefly about why I've got a Fibonacci levels here. Obviously the market's trending down, right? So I shouldn't really be looking to go long. However, These 505, which ended up being 507 contracts, yeah, made me realize there's a potential that the market might want to bounce here for the reasons I previously discussed. So I put the Fibonacci there just for the purpose of confluence, and it confluences with this support and resistance level here, this inflection, this supply and demand zone that occurred here, right? So it's just to add extra confidence, plus the fact that we've got a bottom here, a support level here. All right, so anyway, back to what's going on. So these 500 and I think it ended up being 507 contracts were hit, and the market's traded all the way down to where? To our swing low, and it can't break beneath it. And then we start having absorption taking place very quickly. Very quick. Look, 1 2 1 2 1 2. Okay, now that happens, and then it bounces. The buyers come back in. Okay, here we go. The buyers come back in and they take control. At this point, I'm confident to go long for a double bottom trade, based on the fact that I believe the buyers are going to push the price above 68.25, and then the sellers will be trapped if it continues to go. Okay, I'm considering cancelling the order now because I think it's gone. I don't think it's going to come back. All right, so I attempt to go long here because the market stalled around 70. Let me just pause it quickly. So I attempted to go long again because there was a stall. We had a few more exchanges taking place. I want you to look at the ladder. Look at the way it's trading up. These are all the contracts that are trading through 8s, 14s, right? We're having sellers placing large orders on the ladder, and they're just getting taken by the buyers. 21s, 14s, 10s, 29s, right? So at this point, I know the buyers are extremely convicted. So I place another order to go long at 70, not too far from where the market was traded. And guess what happens? I don't get filled. That for me is a direct sign that there's strong momentum in the market, and these sellers are definitely trapped. Now, this is where the trade takes a different turn, because I look at the chart now and I identify my classic pattern. This is the pattern where, and I don't have a name for this. Some people might call it a rounded bottom. They might call it a double bottom. For me, the most important thing is that the market has sold off. It consolidates, right? This is my perfect momentum setup. And I'm being honest with you. Go and look at this on any market. Gold, oil, S&P. And of course, like everything, it's not going to occur every single minute. But when this occurs, and it will occur at least a couple of times in a day, it should do. If it doesn't, then it's just not a good day. But when this does occur, it will move. What you need to do now is identify what is the size of your target. What are you looking for? For me personally, I always look for these magnet levels, as I talk about, these vacuums where we have a candle where there's minimal wicks, minimal support, minimal resistance. In this case here, looking at these candles, we can see there's minimal wicks. So it's more than likely to move up and move up quickly. Right, so now the trajectory of the trade has changed. I'm no longer concerned with this, and you're going to notice quickly I'm going to cancel this order and place a new one, and then identify the level. So pay attention to what I do now. Observing the ladder, and then I go over, I look at the chart, I look at where the target is. I've seen everything I need to see. I look at the 5 minute. Have I got enough distance to take 10 points, 40 ticks out the market? Yes, so I'm in. Now let me just pause this quickly. I've entered the market, yeah, and I want you to look. We've got 38 contracts. This is nothing in comparison to the 505 we had, yeah, 507, but it's still large in comparison. Let's see what happens when they get filled, if the market sells off or whether it instantly pops back up. So the 38 contracts get filled, market goes there, and then instantly aggression, strong push. At this moment, I can see the market going to where my target is hit, and I want to add more contracts.
Order submitted.
I add my contracts, but the momentum is so strong that I'm not filled. And very shortly the target's hit.
Order filled.
All right, so there you see it. Okay, so what's the lessons we learned from this trade? Two things: the ability to understand when there are trapped traders in the market, and understanding at what price they need to get out, right? In this occasion, any trader that was trapped short is likely to have a stop above here. So when it cracks here, they're going to automatically enter their position on the fear that the market's going to continue to rally up. That's the first thing, okay? Secondly, the power of these chart patterns which occur across multiple time frames, right? Very, very important to recognize and to be able to identify when to enter. So let me break it down where you would place your stop if you were to enter a trade like this, right? You would enter on the break just above the resistance level. You ideally want to have at least 2 to 3 identical highs, right? Your stop would be below the swing low level, just below here, right? Your target, and another thing you're looking for, you don't want to see any wicks. As soon as the market starts to rally up, we don't want to see any wicks. You want it to be a clean red candle, because that guarantees a smooth a smooth trajectory of price at least to the top of that candle, or whatever your target is. For me, in this case, 10 prices, 40 ticks, okay? And that's what it is, my guys. So hopefully you found that helpful. We've gone 11 minutes. I really wanted to try and do it as quick as possible, but it is what it is, man. So stay blessed, have a good week, and I'll be back soon with another one.